share. Right, that is now recording, I think. I'm just going to test this screen recording, guys, because it's weirdly, it's like flickering and stuff. Right, that seems to be working all right. Okay, cool. Right, good to go. So what I'm going to do tonight, team, I'm going to talk you through what my kind of backtesting process is, what I'm looking for, how I do it, and ultimately the reason why we do it. The main kind of focus on backtesting, I think, is to obviously test your rules, make sure your rules are working as they should, and B, hone your eyes in. And if you don't know what I mean by that, as in you are conditioned to repetitive tasks. And if you're doing something new, any new task that you do in the early stages, when you're doing that task, whatever that may be, it becomes difficult. It's something that you're not used to. It's something you're not familiar with. If there's anything that you've done in your life that's like, has anyone done like a really repetitive job when you've done the same thing over and over again? Yeah. Give me an example. There you go. Right. Those first few eye tests, I bet you were shit scared. You had people's eyes up in the machine. You had to like blow in their faces. You had to ask them to read that little thing on the wall. And those first few times you shit yourself. You're like, I'm nervous. You don't know what to do, and it takes a bit of getting used to. Now you could do it in your sleep, right? Okay, that's it. Build up a confidence. I think there's a statistic that says for something to become routine, for something to become habit, you have to repeat it 26 times, 26 repetitions. Now, let's say you've got one setup in the marketplace, okay? That one setup, if it's a decent setup, it's probably not happening all the time, okay? Something that's really high probability. I mean, just look at this trend here, guys, okay? For those of you who've watched kind of the first few videos on the Beginning to Winner series, talking about kind of trend in market conditions, okay? Let's just draw out our trend here, okay? Kind of that one. When you are drawing your trend lines, guys, it's personally, I think it's not. Don't get too lost in what is a good trend and what isn't a good trend. There's so many ways to do it, and there's so many different ways that you can draw your trend lines. Personally, I think just draw the obvious ones. If it makes sense on the chart, then it probably is right. Okay, it doesn't have to be. I mean, so you can turn it into a science. You can be like, right, every time I see a up candle with two candles either side, I'm going to mark that as a swing point. Every time I see a down candle with two candles either side, I'm going to mark that as a swing point. But then you can kind of get lost in these kind of micro trends. You then start drawing on things like this. Let's say you did that rule, you're drawing on this, and then the trends, as you can see, they get really mucky. So personally, we can see this trend is on the way down. And if you look at the differences between these two lines, let's just put them on blue, okay? One is very clearly a downtrend and one is really mucky. So it doesn't make a huge amount of difference, I think, in terms of actually drawing your trends on. Just draw what makes sense. Anyway, point to come back at is if your setup is really good, you've got a really decent setup to work with, it's not going to happen all the time. So trying to find 26 setups in live markets is difficult. It might take you a month. Now, that's an entire month of trading, okay? And in these early stages, when you are learning, you need to be trading all the time. And the best way to be trading all the time is by backtesting, okay? Far too few of us do enough backtesting. If you ask Jake, myself, honestly, if we did enough backtesting in the early days, the answer would have been no. Very few people put the time into backtesting properly. And then when you do it and then you adopt it and you take your time to put it into place, I don't do much these days, but I get at least half an hour in a week. I don't trade on Saturday, Sunday, or Mondays in live markets. So personally, what I do is I do 10 minutes on a Saturday, 10 minutes on a Sunday, 10 minutes on a Monday. It's not that much, but it's enough. And if I'm ever changing anything or if I'm adopting any new rules, backtesting is really, really important, because those 26 trades that we just spoke about that in the live market might take you a month to find, backtesting, you can find them in a 20-minute session. So it's a way of you potentially doing an entire month's worth of trading in 20 minutes to half an hour. Okay. Now, what we need to do our back testing is we need some rules. Okay, so I'm going to build a really basic plan here. And let me just go back to the 5 minute chart. So you'll notice when you are back testing, okay, there's a couple of ways you can do it. First way you can do it is you can just literally look at the chart, draw on some markings, okay, and basically look at how you might have traded it. This is a very kind of cherry picking kind of way to do your trading, but it is effective, especially when you are very new to this, to kind of get your eyes used to looking at what you're seeing. Let's say you're just drawing out the highs and lows and you're drawing out your zones. Let's say, I don't know, you're using, say, premium and discount, for example. You want to draw out your premium areas and your discount areas. This is a real quick way of just doing that. Go onto like a time frame that you're happy with, draw on your swing highs to your swing lows, and draw out your trades. Okay, you can then zoom into these areas and then you can find setup. So I zoom into this area here. This is a premium area, so I'm looking for a short. Well, what we've got here, we've got a raid of the highs. Let's draw on that raid. So we've got a raid of these highs here, as you can see. Let's draw on that raid. We've then got a break of structure in the direction that we want to be moving in. Okay. And we're then looking for break of structure. Then we're looking for some sort of entry. Now, the ideal entry is the 50% entry up here, which, as you can see, we don't get. Okay, we haven't broken down here. So you can only look at this entry from the 50% zone. Let me just put the right one on. 2 seconds, guys. You can only look at this entry. These ones don't count. Okay, these trades don't count because none of these have broken this structure. This area here isn't there yet. Until we've broken that structure to the south, we're not looking for sells because the strong money is in the buy side. Look, push up, push up, push up. Okay, so this is our raid into our zone. Okay, so that's what we're looking for. That's one of our rules. We're looking for a raid of the highs into a zone. Well, we've got our zone from here, look, because this is a premium area in a range. Is everyone up to date when I talk about premium and discount? Everyone cool with that? Just, yeah, cool. Put your thumbs up, Ibra. Put your thumbs up if you don't. Yeah, okay, cool. Everyone know what I mean. Premium discount. Okay, so you've got a range here. Okay, we're in a downtrend because we've broken this low. Let's get rid of this box. It's probably confusing you guys. Okay, so that's all right. It's me. I couldn't load it up on my laptop, so I'm here with Ibra. So we're doing this together. Who's that? Shaq. Hello, Shaq. How you doing, man? You good? I can just see your eye. A single eye. There he is. Hey, you good, man? Good. Yeah, of course. Are you? Okay, right. I'll show you really simply. So this here, guys, this is his little window moving about. Okay, this is your favorites bar. Okay, I would suggest using it as much as you can because this thing down the left-hand side is full of loads of shit you'll never use. If you open up the kind of the toolbox here, so underneath the line one here, these are all your different lines. You can star them. Look. So let's say I want to use a vertical line. I can click there, add to favorites, and you'll see it pops up down there. Look. Okay, so that is now a tool that I've favorited. So get used to doing that. When you start using the same tools kind of over and over again, get used to kind of favoriting them. So the premium discount tool, is that what you're asking? Which tool it is? Yeah. Yeah. Okay. Premium discount tool is the GAN box. Okay, the GAN box there. You can set. These are the settings. Okay, I put them in the chat yesterday, but I might build a feed for maybe tools or something. I'll put this in there anyway because it's quite useful. That there. I don't know if you want to take a screenshot of that, Shaq. Okay. Yeah, you did. Okay, that there is the setting for premium and discount. Okay. You can color code it however you want. I have it all white just because I don't know about you guys, but I'm real particular about my color scheme. I like my color scheme looking fresh. It gives, I think when your chart looks good to come to, you're more willing to go to it, I think. So you can change it however you want. This, of course, obviously changes all the colors. So however you want to do it, it's completely up to you. I have mine all white. I think it looks quite good on a black background, but whatever, it's up to you. Okay, so that's your premium discount range. Those are the tool settings. If you haven't done this, guys, take a screenshot of it. And then what I would do is, so basically, if you want to get into the setting box, just either right click on one of these dots here, okay, and click settings, or double click on one of the dots. Okay, pretty self-explanatory. Okay, and then this style page, don't worry about coordinates, don't worry about visibility. Okay, just look at the style page. This is then how you fill it out. You want these ones ticked, you want these ones colored, and then everything else is done for you. It should be pretty set up. Just copy this basically. All right, so that's that one. Okay, now the next one that I use is exactly the same tool. Okay, the one I use to frame the 50% of an area. So let's say I'm looking for a trade and I want to get 50% of the area. It's exactly the same. However, my template is this. All right. Take a screenshot if you want that, guys. Okay. My template is that. And all that happens here is it just puts top line, bottom line, 50% line. There's no labels on it. All right. Pretty self-explanatory. You can put the labels on if you want, but I don't think they're necessary. Okay, so no labels on it. It's there. It's just good to go. Okay. Templates, when you've got your settings set up correctly, make sure you save as a template. So templates down the bottom left-hand corner, click that, click save as, and then name it to whatever you want. If you want to overwrite a previous template, you can click that little drop down and do that there. That's cool. And then you are good to go. So use your templates as well. Templates are real good for like your boxes as well. So let's say that's my kind of my normal zone box that I'm using. Let's say I don't like that zone. That's like a weak zone. So I'm expecting that zone. Let's say, actually 2 seconds. Right. So let's just try and find a good example. Okay, cool. So this zone here is a strong zone. Okay. Why is this a strong zone? Anyone got the answer? Why is this zone here a strong zone? Is it discount? Yeah, but what did this move up do? Break structure. Say again. Impulsive move from the bottom. Yeah. So on a 15. Oh shit, I'm gonna lose that. No, that's good. Right. Yeah. So you're right. So impulsive move. Probably good. Yeah, we've got some imbalances there. Okay. I will do a full video on imbalances, guys, because they're really powerful. But whenever you see these little candles here, look, I'll try and zoom in as much as I can. Whenever you see these candles here that leave a gap in the marketplace, as in there's no wick to the left of it and no wick to the right of it, this is an imbalance. This means there are a fuckload of buy orders in the marketplace. So many buy orders, the sellers haven't been able to come down and mitigate that. They haven't been able to come back and test that. There's too many buy orders for them to be able to test. So this forms an imbalance. And what you'll find, as you can see there, is price will normally come back to it. What else do we see, which happens all the time, is 50%. Okay, so 50% of the zone is so important. Does anyone know why 50% of the zone is important? Or why it's so commonly tagged? No? Yeah, well, in this area, yeah. So yeah, I mean, there would be basically it's orders. Okay, so in any area, whatever it may be, okay, whether it is an order block or a point of interest like this, the reason why price comes back down to it is because of orders. Okay, so supply and demand tells us that to move this market up, it takes shitloads of buy orders. And what happens is when there's shitloads of buy orders in the marketplace, the big players in the market, they end up losing money on their sell orders because they're buying and selling all the time. Remember, they're buying, they're selling, they're buying, they're selling all the time. And what happens eventually is the buy orders outweigh the sell orders, price moves up. Unfortunately for them, their sell orders that they placed here, okay, because they're buying and selling all the time, their sell orders, when this price goes up here, they move into a massive negative. Okay, and in order for them to get back into a positive, they have to bring the price back down. So they sell the shit out of the marketplace, close some of their buy orders, and they move the market down. There's millions and millions of institutions doing this all at the same time, and it's like a collective front. A lot of people call it the composite man. It's the collection of lots of people trading all the time. It's the best way to look at it. Okay. The reason why 50% is so often tagged in whatever it may be, and the reason why I use it for my entries, is because if you think there's millions and millions of people trading in this, where are the majority going to place their trades? On average, probability says if loads of people are trading in this area, where are most of them going to be? They're going to be at 50%, aren't they? because that's the average. That's the, if you understand what an average is, that's the average of anything. The average of point A to point B is bang in the middle. Okay, so that's where most of the orders are sat. So 50% of a zone is something that will very, very commonly be tagged. There's another one here. Let's say I draw on that 50%, okay? And you'll find that it almost has pinpoint accuracy. Yes, of course, they will get blown as well. But if a zone is going to hold, and there's a few things that we can look at for a zone to hold. If a zone is going to hold, usually the last 50% of the down move is what will be tagged. Okay, and that's why we use the 50%. That's why I use it in my trading, because it's a way of you getting in a really nice entry. You could have played this trade safe. You could have bought it here, okay, and you would have taken that trade to the high and you'd got yourself a 2.27. Myself, I will take the trade at 50%, and my 2.27 is now 5.54. So I've doubled my trade value by using the 50% of the zone on the exact same trade. So 50% as a rule should be part of your trading. Simple as that. Okay. Again, mate, it's a difficult one. It's so subjective. It's however you want to do it. You know, some would argue that it's the whole down move, so that's your 50%. I kind of use. Do you know what I normally do? If it's clean like this one, if it's really clean like this one, and it's a clear down move up, then I'm going to use the candle down, okay? Because then, what else have we got? What have we got to the right of it after this down move? It's gone back up, but what is it left behind? Imbalance, that's it, okay? So it's left behind an imbalance. So for me, that makes sense, okay? This move has raided these lows, okay, before we've broken structure above. Okay, another one to use the templates for boys and girls, is your lines, because there'll be loads of different lines that you draw. As you can see, there's liquidity lines, there's breaker structure lines, there's equal high and equal low lines, there's raid lines, there's major breaks of structure, there's just basic trend lines. So you can use this as well. And the same thing, double click on the line. You can write in whatever text or whatever. Okay, you can color the text however you want. You can position the text however you want. You can put it in the middle of the line. You can put it on the top of the line. So that looks quite nice, to be fair, doesn't it? Look at that. Do you know what? I like that. That's lovely, that. Hey, I think we've got a new setup here. Right, and then let's say I want to use that as my raid line now. Okay, right click it, or in your template box, save as. I just put like new raid. Okay, and then you can save it there. Okay. You can put little arrows on it as well. So the style of it is, well, we're going to have an arrow on the right, okay? Because that's pointing to my raid, okay? So that's now my raid line, okay? Same thing applies up here. Let's say I draw a new line. If you want to quick copy something as well, guys, hold the control button, and then just hover your mouse over whatever it is and drag it away, and it'll just keep copying it as long as you've got your control button held. It's a quick way of just drawing out things quickly, okay? Let's say this now is my breaker structure line, okay? I'm going to put breaker structure in there, and I'm going to save this template as new BOS, okay? And then now, whenever you want a raid or a BOS marked, you've got it there nice and quickly, okay? Anyway, come back to what we're saying. So the reason why this move is really, really good is it's raided the lows first. There's two elements you want. If you watch that latest video I did on a GBP USD breakdown, it talks about that in detail. There's two things that you want to signal an area you want to be paying attention to. You want to raid on the highs or the lows. A raid is a quick move down before a quick move up, or a quick move up before a quick move down, okay? They're not all created equal. This one, for example, did not hold. And we'll come back to that one in just a moment, because there's a clear reason why that did not hold. But this, for us, is a good move. It pushed down, pushed back up, and then afterwards, we want to see a break of structure. So before we've drawn on this area, okay, I'll show you how I'll play it out. Let's play this out from here, okay? So imagine there's nothing on this chart. And this is kind of how we do backtesting, to be fair. Okay, imagine there's nothing on this chart. So I'm now looking for entries. Do you know what we're going to do? Let's go from here. Okay, now, I know I'm jumping around a little bit, but I'm just conscious we want to get as much information as I can. Can everyone see this spreadsheet? Okay, I'm going to send you across a copy of this spreadsheet. It's really, really simple. I've just built it today, because my one that I use for my backtesting is really complicated. So I want to keep this nice and simple. Okay, so This is my spreadsheet. You're going to write the pair on that you're trading. Let me zoom in on it for you a little bit. Okay, the pair on that you're trading, the time of day. So we'll come back to that. But let's say the trade enters at 8 o'clock in the morning. You're just going to write 8 o'clock. The entry type, we're going to test 2 entries today, either a 3-push break or RBR 50, which is a raid, a break, return to 50. You can probably see that one already, okay, because we've just been talking about it. Your stop is how big the stop is, so 8.4 pips, okay, and then these are your trade outcomes. And however you set them up is up to you and your own trading rules. I'm going to talk you through my trading rules today and what we're going to be looking at, and then let's get into some back tests and let's actually test out some trades, okay? So let me just find some anchored text. I'm going to put some anchored text in here. So these are my rules, okay? What I'm looking for is 1, okay? Raid of highs or lows, okay? 2, break a structure that leaves imbalance. 3, return to 50% of raid move, okay? So these are my entry rules for my RBR 50. That's where it comes from. Raid, break, return to 50, okay? That's my entry rules for my RBR 50, okay? 3-push break. We broke this one down a few times now. If you don't know what a 3-push break is, you haven't watched enough of the content, but we've broken it down a few times, okay? This is where we've got higher time frame zone, okay? 1, higher time frame valid zone. 2, 3 pushes into zone. 3 3 is a break of structure in line with trade on 5-minute or above. Okay, and then 4 is exactly the same thing again. Okay, return to 50% of last push. Excuse me. Now, the last push. Oh, hang on. Come on. That is fucking massive. Oh my god. Right, let's make that smaller. Let's make that more visible so you can't see it. Right, and where do we want it? We want it on the right hand side. Why is that doing that? I don't want that. I want it. How do we do this? Border, text wrap. Nah. Whatever. Right, let's just leave that there. So we're gonna leave that in top right hand corner. Okay, so it's always there. Okay, these are our entry criteria. This is what we're looking for. Okay, now these are basically the same move effectively. All that the third push does into the zone, and I'll talk you through this when we get to it. All that third push does into the zone, that third push is our raid basically, because that third push takes out liquidity to the left. It then breaks structure. And sorry, we obviously need 4 as an imbalance. Okay, so the core to all of the setups are basically the same. Raid, break a structure with an imbalance left behind. Just, I don't know, maybe kind of repeat myself. It's really to get these things ingrained. Does anyone know why we need an imbalance? Can anyone tell me why we need an imbalance? Why is it important? Oh my god, he speaks. How you feeling? Oh, I can imagine. Hey, I love it. Is the girlfriend out of the room? Yeah. Right, okay, so I'll give you the answer. What the imbalance does is it leaves a reason for price to return, okay? As traders, we don't want to be just trading off something that we think might happen, i.e., you see a push up, so we think price might come back down to it. That's not enough. What we need is a picture. We need an understanding. We need multiple confluences. Let's go use this RBR 50 entry, okay? A raid of the highs or lows, that tells us there's big players in the marketplace. Watch the chart, boys. and girls, that move there, that takes fuckloads of money. Because think, there's loads of orders there. Okay, all of these people who are seeing this uptrend here, look, all of these people, when they see these areas leveling out, because so many people don't trade like us, by the way, whilst we would see this as a liquidity point and we would never in a million years place a trade on a fucking straight line like that, okay, because there's equal lows and that is just asking to be swept. There's another group of people, okay, let's say we're divided in two. There's another group of people, some people call them kind of retail traders, whatever you want to call them, but we're all retail traders really, but that's another conversation altogether. Okay. There's another group of people that will be placing their trades there and they will be buying. Okay. And they'll see this and they'll see this market move up and they'll be buying. So for price to come down here and take out these lows takes loads of cash, because they got to bust through all those orders. They got to bust through all their buys. Remember, think of it as a set of scales. Okay. And that set of scales will, it gets imbalanced either one way or the other, okay? And if there's loads of buys in the marketplace here and here and here, for the sellers to outweigh them and push the price down, it takes a load of selling pressure. So when you see a move like this, a push down and a push up, that tells us that there's big people in the marketplace. There's big money, there's strong money in the marketplace. So that's point number one, okay? That's the first thing we're looking for. Then that breaker structure here, look, okay, so now we've got a clear breaker structure. Can anyone tell me what we are looking for a breaker structure to be valid? Anybody?
Is it a break of the last high?
Yeah, but what for that to be valid, so with this, let's say this push up here, let's say it just tapped above and then came back down, would you still see that as a breaker structure?
No.
Yeah. So technically, that move there is a breaker structure. Okay. So this is a good example. Look to the left. This one here. Technically, that move there is a breaker structure. That is a breaker structure. Okay. That is technically a breaker structure. However, I don't class it as a breaker structure. Jake, do you class that as a breaker structure? That one there? Oh, girlfriend's back. Oh, he's typing. This one here, that wick above, would you class that as a breaker structure? Would you trade off that? No. Okay, cool. So, yeah. 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 Yeah, you're right. It would be a full body candle close. And that's why, again, team, you need to pick your time frames. So, for example, I can't drop down. I don't think I can drop lower. Can I drop lower? Yeah. Okay. So even like on the 5 minute, it isn't either. Okay. So the 5 minute isn't either. But let's say this was on the 1 minute chart. Okay. Jake, you'd probably be taking this if I'm honest. You got a raid there. Nah.
No, because I'd still be using the 30-minute chart for my POIs anyway.
Okay, fine. Okay, cool. But there'll be some traders there, okay, who will see that. They'll see that as a break on the 1 minute chart and they'll take that. But the way I look at it is this: you might get into this zone, okay, and you might get into this trade, but your trade's ultimately stunted. I want to be looking for, I talk about in the chats quite a lot, a high probability and a high potential trade. For me, that's not a high potential trade just yet. Okay, because we haven't had any big movement. We haven't had a big close. This is a big close. On any time frame you look at, apart from the really high time frames, this is a big close above. Even on the hourly, look, you've had a big close above there. So for us, and most of us, let's say we're on Jake's 30-minute area, okay, that is a really clear zone we're going to be looking at, because we've had a massive break of structure. Now, what that tells us, that close above structure, is not only have we had a raid on these lows, and therefore we got some big players in the marketplace, now they've left an imbalance behind and they've broken structure clearly, impulsively with a candle close. This is a zone we're trading all day long. Okay, and you need to pick the time frames that you want to work with. If you want to work with a 1 minute time frame, then that's fine. But you're going to be looking for these zones on the 5, the 15, or maybe the 30. Jake's looking at them on the 30. I'm looking at them on the hourly, and I stay above really on the 5-minute chart. So you want to pick kind of 2 or 3 timeframes that you want to work with. We talk about a lot top-down analysis, and if you've been on YouTube and stuff, you see loads of videos about top-down analysis. That doesn't mean you find zones on the weekly and then trade them on the 1 minute. That I think is too much. What I would suggest that you do is do something like find zones on the hour or the 4 hour, refine them and look for trades on the 15 and 30, and then find your entries between the 1 and the 5 minute. Okay, so you're using 3 time frames, or a lot of the time I'll just use 2. I don't know about you, Jake. Do you use all 3 when you're trading, or do you use 2?
Nah, so like it's really hard without a screen
Yeah.
sharing, so that I can show you my thought process. But on like the daily, I'll always check the daily every single day, no matter what. Always check the daily, just to see how the last candle closed, etc., etc.
Yeah.
But from there, I mean, the daily trend doesn't tend to shift every single day.
No.
So you know what trend you're in roughly on the daily, and then from there, just go down to the 4 hour, and then the 4 hour is your main trend for the day.
Yep. Yep.
See, from there, you're pretty bearish. So
Yeah. High time frame bearish. Yeah.
you're approaching that supply.
Yeah.
Out there, which is very nice.
Yeah, it's really nice actually.
You can see from there, okay, we're coming into it quite fairly quickly, but it's corrective as well. And then from there, I'd be looking, because that's a 4 hour zone, I'd never look for an entry from a 4 hour zone. I'd then look for a lower time frame shift on the 30 minute.
Yeah.
So I would still take that. I would still try and confirm that demand from long. But if that demand failed, then I'd know that 4 hour is holding and it's now shifted bearish, and then I can take that next 30 minute zone.
Yeah.
And then I can confirm that on the 1 minute.
Cool. So so much of it is so personal to you and how you trade. What you've got to do is you've got to develop a trading personality. And me and Jake will disagree a lot of the time on trades. A lot of the time we'll take opposite trades, but we'll both make money. A lot of the time I'll take a trade and he'll lose and I'll win. Or sorry, we'll take a similar trade, he'll lose, I'll win. I'll take a trade, I'll lose, and he'll win, because your edge. Most half decent trading strategies will work 50% of the time, because it's either going to go up or it's going to go down. You're going to be either right or wrong. And with risk management, most trading strategies work. Our trading strategy, Jake's one of the guys that I sync up with more than most people. We trade very, very similarly, which is I think reason why we've kind of working so well within the group together. But there's people. There's a chap in the group at the moment called Keem, who I've been trading with quite a few years as well, and we will often trade completely opposite, but we'll both make money. So your trading personality, your trading strategy is something that's very personal to you. The reason why I like this way of trading, I think probably Jake's probably similar to me, is because this kind of makes sense. It explains a lot more than just, what you need to do, guys, is, draw out 3 lines on the chart. And when you see the 3rd line be hit, just, take a sell from there. And it's just like, I was seeing these kind of retail trading strategies. And I was like, well, why? For me, I need to understand why something's happening, or supply and demand and order flow. It makes sense. It makes sense when you understand why the price is moving in certain directions and where it's going and where it's headed, and the reason why, and the fact that they're aiming for liquidity pools and they're trying to keep trends alive and things like that. It's it makes a lot more sense. So look, zooming out has done us a favor here, because we should have done this a minute ago, if I'm honest with you. Okay, zooming out has shown us that we're actually coming up to this 4 hour supply. Okay, now until we tag that 4 hour supply, which we've just done here, okay, we're still looking for buys. So this setup, in my opinion, is still valid. Okay, we've had the 2 elements that we need. Okay, so this is an RBR 50 entry. Okay, we've had a raid of the lows. Let's put in that new raid. Okay,
before you carry on,
yeah.
This will be quite exciting to see whether this is because that's clearly a reaccumulation that's happened.
Yeah.
Quite excited to see if this is a reaccumulation right under a supply zone that's going to turn into.
I think it is. Yeah. All right. So we've had our raid. We've had our break of structure. Okay. Now this is what I'm looking for Now I'm going to frame my zone on the 30-minute. The zone is really clean. Look, one candle up, one candle down. Sorry, one candle down, one candle up. Imbalance left behind. So we got a really, really clean area. You know, we can drag out this imbalance here. This gives more validation now to my 50% because I expect all of the imbalance to be taken. Okay, so I'm going to set my trade up. I'm going to move some of this out of the way just to keep it a little bit tidier. I'm going to set my trade up. A long position here. If anyone wants to know what the long and the short position is, you haven't found it yet, it's here. It's in the 1, 2, 3, 4, 5th, 6th toolbar down. Okay, long and short. Excuse me, long and short position. Okay, I normally go slightly above. So I normally go slightly above. Okay, and now we need some profit taking. So I'm going to place 2 trades. Okay. I always place 2 trades. I'll explain to you why. So 2 trades, okay, total of 2R, okay? And if you're trading at 1% per trade, that's a total of 2% per trade. Use R because then it's relative. The R is relative to whatever you're trading a percentage-wise. Okay, so I'm going to place 2 trades. A couple of new rules that I'm playing about with at the moment. I'm taking half an R, so half of the first trade, for example, off at 1R. Okay. I'm taking, and then everything goes to break even, by the way, and then everything goes to break even. Okay, so as long as I get 1R, I've made some money. Okay, I'm going to take off the other half of that first trade at 2R. Okay, then I'm taking another half off. Oh shit, what was in there? I'm going to take another half off. Okay, so this is now one position fully closed of that first. Okay, then I'm going to take off another half at 4R. Okay, and then I'm going to set a final target, and that'll be my final half off, and that'll be somewhere probably between 5 to 10R. Okay, that's what I'm looking for. Okay, now I've worked out these figures for myself. Okay, but this is how it works out. If the first trade comes off at 1R, I make 0.5. So let's just use these as percentages for now. So I've made 0.5% on that first entry, and if it loses, I've then made 0.5%, whatever. Okay. And for those of you who are starting out, okay, so someone like Jake, there's another chap in the Discord called Danny. Okay, in my opinion, they're mentalists because they just trade until I like 7, 8R, and then they start taking profits off. I've never been able to deal with that. I like to build my bank nice and slowly. Okay, and whilst they may get some real good trades and make a lot more money than me on their winners, they are losing more. So again, you've got to find that balance, whatever works for you. I like small, steady growth. Okay. So my first one comes off at half. Okay. I make 0.5%. My second one comes off at 2R, but that half now has gone to double. So I make 1%. Then I take another half off at 4. So that's half times 4, which is 2%. And then my final, let's say it doesn't come in, okay, for argument's sake, what I've now made, let's say I just meet my first 3 TPs, I've made 3.5%. Or if you're trading at 0.5% per trade, you've made 1.75. Okay, so it's relative, which is why we use the word R. If you end up getting your final, let's say you end up getting a 10R, or 10 divided by 0.5 is obviously 5. The ideal scenario is that when you hit the home run trade that we've spoken about in the chat, you've got 8.5%. Now, at the end of the day, team, if you're getting one of these home run trades a week, you do not need to trade anything else ever. If you could guarantee yourself 8.5R a week, Jake, how happy would you be?
Yeah, that'd be decent.
We'll be millionaires.
Just go on calculator, Mr. Tech.
Hmm?
Go on calculator on the computer.
Yeah.
We'll just blow some little minds.
All right. Go on then. Tell me what to do.
Okay, so say you have £100,000 FTMO account.
Okay, so £100,000, $100,000 FTMO account.
Okay, and then you're trading at 1%, yeah?
Trade at 1%, yeah.
So you do with $1,000 trade. You make 8.5% a week. 8.5
times that by 8.5. So this is made. I've just had a horrible thought. I don't think on the recording you're going to be able to hear your voice. I think you're only going to be able to hear my voice. So I'm going to repeat back the things you say. Okay, so you've got a $100,000 FTMO account. Okay, we've multiplied that by 1% per trade, and then we've got an 8.5 hour trade. So yeah, so let's say you took that one trade, you hit your final TP. Yeah, with you.
That makes you 8,500.
Yeah, yeah.
Yeah.
Times that by 4 weeks.
Let's say you only do that for. Let's say you only do that for 2 weeks.
So let's say you only do that for 2 weeks out of the month. Yeah.
And then you do that every single 2 weeks for the rest of the year. So
26. Yeah. Woo!
there you go.
Happy with that, aren't we?
Yearly
What the FTMO pay out? I don't trade with them yet. Is it 70%? I think it's 70, isn't it? Or 80. Yeah. You'd be happy with that, wouldn't you? And that is potentially just 2 trades a month. Okay, so, you know, I think a lot of us, and I'm really guilty of this, I'll be honest, over trading is there's the few things that kill a new trader. Not having rules is one of them. Okay, and I hope tonight has shown you kind of the thought process that goes behind having rules and the reason why we need them. Okay, not following your rules is another one of them. And I think the third big one that we don't talk about enough is over trading, always wanting to be in the marketplace. There's weeks where I've been really, really busy and I'll see some real gold setups and I'll just take those. And those are like my most profitable weeks. And I get to the end of it and I think, how the fuck have I done that? How the fuck have I done that? I've made more R than I've made in the past 2 weeks or the past 3 weeks or however long it is. And I've barely been on the charts. Well, that's because I've only taken the trades that are really, really obvious. So that's a good thing to kind of get into your head, that you don't need to be trading all the time. And actually trading all the time will be the death of your bank. Sometimes I'll have some really good weeks, and then on a Friday I'll feel like, you know what, I feel a bit fruity. I've had a good week. I want to, this one looks good, and I'll maybe bend my rules a little bit, and I end up losing, and I'll end up maybe at break even, or end up on half the profit I'm on, and that's something I still have to work on these days, guys. Even though I'm funded now, I'm making money, and I've got a couple of big accounts, shall we say, with my Forex funds. I still struggle with over trading because I love trading and I want to be in the market all the time. So it's something I got to work on. And that's why I'm currently working on my rules and things like that and making them really, really rigid. Anyway, let's get back to this because we've got 15 minutes left. We've basically done no backtesting. Okay. But I think these are things that we need to discuss ultimately. Okay. So ideals. Yeah. Yeah. Yeah.
Since I've just been laid in bed, but I still want to be involved in the trade. So
yeah.
what I do is if I'm like, oh, that setup looks really good, I'm going to go for it.
Yeah.
I'll just trade a 0.001.
Yeah. Yeah. That's a good way to do it. Something that you're thinking of doesn't quite fit your rules. It's a great way to do it. Then you're still taking the trade, still paper trading. Yeah.
And you still feel like you're being involved.
Yeah.
Almost like you're getting your fix.
Yeah. Getting your fix. I love it. Do you know what I'm going to do? Very, very quickly. I'm just going to stop this recording because I'm really conscious. I think that no one on the recording will be able to hear you. Just let me just stop this. Let me start the recording again and I'll see if I can get you in again. Just give me 2 seconds. It's still a work in progress. All of this is all very new to me. Right. Okay.
Yeah, it's all right. I mean, it's not the most ideal, the fact that I'm laid up in a hospital bed anyway.
Are you in hospital?
Yeah, I'm still in hospital, yeah.
Are you?
Yeah.
Oh shit, I thought you'd be home now. Why are you still in?
Because I was a bit worried about how I was going to sleep tonight without any pain medication. Yeah. So
Fair enough. Right, before I crack on, team, does anyone have any questions they want to ask before I get on and actually do some backtesting?
Everything's clear so far. Really good.
Yeah, cool. Is everyone following? Because I appreciate sometimes that some of the things that we discuss for me and Jake are really simple because we've gone through it a million times before. But for you guys, this might be well, a lot of it is new. So is everything clear? Is there anything that we've gone through today that just doesn't make sense that you'd like us to go through again?
going back to this break of structure, we're not classing it as a break of structure. Is that what you're saying?
We are classing it as a break of structure because we've now had the candle close. It hasn't just wicked above. It hasn't just like this one here.
Yeah.
It hasn't just wicked above, then dropped back down. If that happens, that wick above, that's basically a raid. That
Okay.
doesn't give us confidence that that actually tells me, do you know what we might be looking for, especially where we are in this range? If we zoom out to this higher time frame range, okay, let's just get rid of some of this shit on the chart, okay? Let's look at our higher time frame. So what we're looking for, guys, and there's some other rules that we need to work on as well. So let's just type these out, and I'll come back to your point, Ebra. Or Shaq, whichever one it was.
It's Shaq.
Shaq, sorry, dude. Okay, so there's a couple of rules that we want. We want to be trading with trend. Okay, so these are like the unbreakables. Okay, so this is if you want to build yourself some simple rules. Okay, you want to have some unbreakables. Okay, so trade with trend, pretty self-explanatory. Okay, buy and sell to BNS from premium discount, P&D. Okay, again, pretty self-explanatory. Premium discount. Okay. Bank Mercy, just got your message following. Good. Right, okay. So buy and sell from premium and discount. Again, pretty self-explanatory. Okay. You can add in certain things like I don't trade Monday, so no Monday trades. Okay, or whatever it may be. Or there may be things that you want to fit in, like, I don't know, let's say you start taking, I don't know, your work means that you don't take any trades until after 7 o'clock, but at 7 o'clock in the evening, but they're always shit. Then don't trade after 7. Simple as that. For me, for example, okay, my trading zone is 8 a.m. to 4 p.m. And if the trade doesn't appear, then I'm not taking the trade. Okay, unless it's crypto. Crypto's a little bit different, but we can play around with that. Okay, so those are our kind of unbreakables, and let's just use for these ones to keep it nice simple. No buying in premium, or no buying after premium tagged. Okay. Actually, no setups after premium tagged, and obviously no buy setups. So that would be no sell setups. Okay. So sell setups after premium tagged, and no buy setups after discount tagged. Okay. And you'll see what I mean by that in literally just a moment. Okay. High time frame trend, it's 4 hour. Zones, 30-minute to 1 hour. Setups, 5 to 15-minute. Okay, so these are our unbreakable rules. This is what we're looking for. If it doesn't meet those rules, then we don't take it. Now, the point of this is to, when we do these backtesting sessions, we then test our rules. We test our rules out. We see which ones work, see which ones don't. After a month of testing, or after you've got 100 trades, I think 100's a good number. Once you've got 100 trades tested of some rules that you've followed, once you've got 100 of them tested, well, you've got a good percentage to work with, haven't you? You've got a pretty decent strike rate. If 50 of them win and 50 of them fail, well, you've got a 50% strike rate. If you can get a 50% strike rate back testing, you are pretty much ready to go. What I would say when you're back testing, because you are able to pause the charts and cherry pick and trade all times of the day, you want something like, I would say an average trader, Jake, what do you think? 60%, 70%, an average kind of successful trader, maybe probably the lower end, maybe 60%.
All depends on the RR they're receiving per trade. So obviously your strike rate will be higher because you're taking.
Yeah. So I'm talking. Okay, with you. Yeah, makes sense. On average, though, what would you say an average trader strike rate would be? I don't think it'd be particularly high. I think anyone who tells you it's above 60-70% is normally lying.
Nah, probably more leaning more towards 50 and 60.
Yeah, 50-60%. Okay. So a professional trader, 50-60%, that's a good place to be, because remember, your win should your loss is always 1R. Whatever that may be, okay? It's always 1R. You know, whatever you're trading, whether it's 1%, whether it's 2 positions, whether it's 3 positions, doesn't really matter, okay? And I know that kind of contradicts what I've drawn around here, but I'll come back to that. Whatever you're trading, your loss is consistent. It's always the same, okay? Or it should be, at least, Okay, so what you should be doing when you're setting up your trades is see how big your stop loss is. So on this one, the stop loss is 8.7. And then you use a calculator to work out, well, if I want to trade at $10 per trade, which is 1% of my $1,000 account, then I need to make sure that I take 8.7 pips worth of units, so that if I move 8.7 pips, I only lose $10. That's what a good risk management plan does. And if my stop was 20, my trade would be, or 16 to keep the numbers the same, my trade would be half the size in units. But then if it moves 16 pips, I only lose $10. Everyone following that? And then if I expand that again to 32 pips, and my trade is now halved again. So let's say my first trade was 0.5 units on 8 pips. Then it becomes, what did I say? 0.5, 2.5 pips on double, and then probably 0.1 on quadruple. So does that make sense to everyone? Your trade size should vary based upon your stop loss, because if you always want to only lose 1%, your trade has to get bigger and smaller depending on whether your stop loss is bigger or smaller. Everyone cool with that theory? God, Jake, there's so much we got to go through, isn't there? There's so many things we need to.
When he says your trade size, he's referring to your lot size.
Your lot size, yeah, exactly.
Yeah.
So,
but you can download lot size calculators on your iPhones, and you can get them on Google, and they're everywhere.
Okay, so MT4 is the app that you'll use to take trades, and if you can see this picture here, that's your lot size. That number, don't try and work out what it means, because you won't. Okay, that's the number of units that you take. It's not relevant to any monetary value. That doesn't mean $1, or if that was 10, that doesn't mean $10 or anything like that. That is the number of units that you're buying, okay, of that currency pair. You don't need to understand what that means. I don't fully understand what it means, but it's the value of the trade size, effectively. So if I'm taking a trade that has a stop loss of 10 pips and I want to only lose $10, and that was 1 unit that I'm taking, if my stop loss becomes 20 pips because the trade is completely different, $10 per pip for 1 lot. Can't. Is that right? I'm not sure.
Yeah, that is right.
Is it $10 per pip for 1 lot?
It depends. It depends on the pair, but yeah, it's right.
Yeah, because but then you'll have some pairs that will be completely different. That your stop loss will be 10 pips, but the trade will be twice. Anyway, personally, it's the sort of thing that I don't know what it means, because I'll show you why. I just use one of these.
Yeah. Just like every time you put a trade on, just use a calculator. It's easier.
If you're not doing this already, guys, get it downloaded on your phone. I don't know if you can see my screen. Can everyone see my webcam still, or can they only see my screen?
Yeah, I can see both.
Yeah. Okay, cool. Right. Okay. So I'll show you what I use. If you got an app, I'm not sure if you're on iPhone. I use one called Forex calculators. It just looks like that. I don't know if you can see that. You probably can't. You can't. It's called Forex calculators anyway. You'll find millions of them. Okay, it basically does this, right? Euro USD, that's the pair. Oh, so I know what we're doing. We do all JPY, that's what we're trading. We're taking a buy. Oh, it's not a normal one, is it? That's not what I'm looking for. All right, hang on. I'll find you a better one. Position size calculator. That's what you're looking for. A position size calculator. Yeah, okay, so if let's say I was taking this trade, coming back to my window here. Let's say I was taking this trade here, okay? Now I've got all the elements that I need to enter to this trade, okay? I've got my raid, got my breaker structure with the close, got my imbalance left behind, okay? Now I'm setting up my position, okay? What I'm going to do is guys, I just had a notification. The video is going to close. Right, I'm going to send you a new link. We're going to do that. Is everyone cool for another half hour? Or 20 minutes?
Yeah, it's cool with me.
Yeah, okay. Cool, right.
Check, we're going to shoot off.
Have you? I'll record the rest. I'll record the rest, buddy.
Perfect. Thank you so much.
Do you know what? Actually, guys, do you know what? Right, give me, because to be fair, I've got a shoot off as well. I've just seen what the time is. Right, I'm going to send a new link. Everyone jump back in for 5 minutes. I think we're going to have to do another session tomorrow night on backtesting, because we just haven't got enough. We haven't got enough time, and I've got to shoot off to go walk a dog as well. So, right, let me send a new link out. All right, I'm going to close this one. Let me send a new link out. Everyone jump in for another 5 minutes. I'm just going to close off this webinar. All right. Boys, you back? I can see you again.
Here we are.
Or just your shoulders. Shat, you look big, man.
Oh,
You
man,
gym
I'm
boy.
trying.
You a gym boy? Is it? Hey,
Yeah.
Love it.
Right, the pizzas, man. That's what it is.
Yeah, I know, man. Are you in Brum? Is that right? Do I remember that right?
Yeah, Brummy.
You are.
London are over here as well.
Hey, Deliveroo is the devil, isn't it?
Yeah.
Luckily, I live in the country. Oh, hang
That's
on.
good.
Hang on, what's going on here? Someone's calling me. Who's calling me? Right, Big's not getting it. I reckon he's high up. I reckon he's off his tits on morphine at the moment. Right, on hold. What is going on? Hello? Right, so I know what's happened there. Someone was, I think one of you were calling me and I answered that. I don't know. Anyway, right, okay. So we'll do another 5 minutes, guys. Just want to kind of finish off where we're getting to, and then we'll have to do another one and do an actual backtesting session where I'll just shut up and get on with it. All right. So we've had our 3 things we're looking for: raid, breaker structure, clear breaker structure, and balance left behind. So now we're just going to draw our 50% zone on. So we get our GAN box here. Draw it however you want. You can
the screen.
say again. Oh shit!
Can't see your screen, bro.
Fuck's sake. We'll get good at this eventually. Right, share. Good? Everyone in? Okay, cool.
Yep.
Right, so raid, breaker structure, and balance left behind. Okay, you can draw this however you want. Draw it like that, draw it like that, draw it like that. It's up to you. You've got to test it. You've got to work out what's best for you. I'm going to draw it like this, okay? And then I'm going to enter on the 50%. I normally go just above because that's me not wanting to miss out on the trade. So I'll normally go just above there, okay? And then we look at, right, so I put on my buy tool, okay? So this is my long tool. I put on here, this is where I want to enter the trade. My stop below the low. Again, test how you do your stops. Some people will do it just bang on there. I don't think that's wise. I would normally add like a pip or two, whatever you want to do. Just give it a bit of breathing space because of spread and things like that. And, sometimes it will just wick and then go off on your way. You can be a bit safe. You could use, this is an area here, which is unmitigated. So, you might want to use half of that. I don't know. It's whatever you want to do. I'm going to set it there. Okay. So my stop now is around here. I've got, 9.9 pip stop. So what I then do is I go to my calculator. Okay. I select the pair that I'm on, or JPY. My currency is dollar because most prop firms are on dollars and most trading brokers are on dollars. Account size. I always trade off a 20 grand account. My risk ratio, so I want to do, say, 1% per trade. My stop loss, well, we look at here, this number here is how many pips your stop loss is. This final number is pipettes. So that's 9.9, not 99 pips, okay? So my stop loss size is 9.9, okay? My trade size, one lot, I'm going to click calculate, and it will tell me exactly what size my trade should be. So I then go onto my broker, go onto my MT4, and in that section now, I type in 2.8. okay, or 2.83. And then if this trade loses and it comes down and it touches my stop, I will only lose $20, okay, which is, sorry, $200, which is 1% of my 20 grand account, okay. And then if my stop was below this low, instead I do 24.8 pips. You kind of get what I'm saying, 24.8. And now my lot size is over halved, 1.13. Okay, so this is how you make sure that you keep good risk management. Your trade size is relevant to the trade that you're taking. Okay, don't be just going on and taking, you know, a one lot trade every single time, because if you have a trade that has a massive 50 pip stop, your one lot trade is going to lose you a hell of a lot more than just 1% of your account. Okay, this is how you keep your R relative. So these R's are all relative. Say again? Yeah, you blow your account. Yeah. Right. Okay. So this is very quickly how I backtest. Okay. This trade is still valid. Okay. So we've tagged in now. So this trade is still valid because the setup was before we tagged the higher time frame zone. So no buy setups after discount has been tagged. I've already got the setup. So for me, this is still valid. This is one of my rules. And again, what you do is you write out these rules. You get 100 trades down. Once you've got 100 trades, you've got a strike rate. You want that strike rate above 50%. But ideally, when you're back testing, your strike rate should be kind of 60, 70, 80%. Your strike rate when you're back testing should be higher than in live markets, because in live markets, there's going to be loads of the variables. There's going to be times you're not trading. There's going to be trades that you miss. There's going to be, you know, all these different variables in your trading in live markets that you will not have in back testing. So you want a really, really nice strike rate when it's on a back testing setup. Okay. So we've been tagged in. Now, what am I looking for? I'm looking for my 1R first. So let's just shift this along to keep it nice and clear. Might drop down to the 5-minute view team as well. Okay. So we've been tagged in here. Look. Okay, so trade is in. My 1R is there. Okay, and we've already got 1R out. So I'm at break even now. I go over to my spreadsheet, wherever that is. I go to my spreadsheet. So let's type in all the details. So all JPY. What I would do as well is use like a spreadsheet. So each tab would be for a different pair, and then you can work out, because every pair will respond slightly differently. So you can then work out, you know, your strategy might work. Some strategies just work on some pairs. You know, they don't always work on all pairs. Or let's say you test GU, EU, AU, and GU and EU have an 80% strike rate, but AU only has a 30% strike rate. Well, just take AU out of your pairs. So what you I think you don't learn in live trading is you don't get a big selection of data really, really quickly. This is going to give you a selection of data. Let's say you only want to trade 4 pairs in a week, okay? And you want to find out which pairs work well. Well, write your rules out, back test 10 different pairs, and pick the 4 pairs that have the highest strike rate. And you know what does this do? When you do this, what this does is it gives you so much confidence. You go out to the marketplace feeling invincible. And let's say you've done 10 pairs and got 100 trades on each pair. That's now 1,000 trades that you've done of your strategy. You know, there's so few people in live markets who have had 1,000 pairs, 1,000 trades back tested before they've gone live. So I'm not saying that you have to do this before you go live and start trading, but start doing this all the time. Do 10 minutes a day. Do 10 trades a day, every day. Make it part of your routine to do 10 trades a day, every single day. And once you've got 50 on a pair, move on to the next pair. Then do another 50 on another pair. Then move on to the next pair. And, you know, let's do the maths, okay? Let's say you do 10 trades a day, okay? 7 days a week.
100 days.
Okay, 7 days a week. Okay, so that's 70 you're doing a week. Let's say you do that over, 12 weeks, for example. Okay, that's 840 trades that you've back tested. Okay, let's say that's over 8 different pairs. Okay, you've now got your 100. So you've now, in 12 weeks, so 3 months, you've now back tested 8 pairs. And you know that 4 out of those 8 pairs, you have got a 80% strike rate. You've not only worked out which ones work and which ones don't, but you've also worked which ones, you've also now conditioned your mind and your brain and your eyes to see this setup. And also you've learned your setup off the back of your head. You don't need your rules anymore because you know your setup like the back of your hand. If you've done 800 trades and you've seen that 70% of the time they win on 4 different pairs, how are you going to feel when you go into the marketplace? You're going to feel so confident in what you're doing. You're going to feel invincible. You're going to feel unstoppable. Are you going to break your rules if you've backtested 800 trades and you know that 70% of the time sticking to your rules works? Are you going to break your rules?
No.
The answer is probably still, because traders are idiots. Okay. But okay, most of the time you're going to stick to them. Most of the time you are going to stick to them. So it's not just about becoming better traders. This is so good for your psychology. And I don't do it enough. Jake probably doesn't do it enough because we're both busy working full time, and our time is spent on trading live markets. But something that I've started doing recently is just getting in 30 minutes a week, and that's 10 minutes over 3 different days. It's nothing when you think about it. Okay, if you can increase that, let's say you can increase this, guys, to 30 trades a day. Okay, maybe 6 days a week, and you do that the same over 12 weeks. You could do basically all the majors. Okay, divide that by 100. What's that? 21. You could do all the major pairs in 12 weeks if you were committed to it, and you know exactly if your plan works. And then if your plan isn't working, or if things are wrong, or let's say you keep getting to 1R, okay, but you get loads of these, but you don't get any of these, or you just get these every now and again. Well, what you can do, you can then revise your rules. You can be like, right, okay, well, maybe we don't go to break even at 1R, okay? Maybe we go to break even at 2R. And then you rerun your tests, okay? And then now your trades have increased. So before you made, let's just get rid of these, okay? Before, when your rules were like this, for example, okay, you've made over a week, okay, what's the sum there? 5.5. Let's say you then revise the rules. You don't go to break even as quick, and then you start winning a couple more trades here or there. You've now tweaked your rules and you've made 8.5, okay? And the key to this is doing exactly this. I'll show you. Okay, let's go back to our trade. Okay, let's see what happens. Right, we get stopped out. Okay, so that is now, that trade is done. Okay, we fill it out on our spreadsheet. Let's get rid of that. Okay, fill out that spreadsheet. We didn't get that one, that's done. But we made some profit. Okay, we're cool with that. One bit back. Okay, we're cool with that. Okay, 4.5, we're happy. Okay, now we've tagged our zone. Okay, so we can't look for any more buys. We can delete all of this. Okay, and that trade is filled. What we can do is, there's a shortcut here. Write this down, guys. Alt and S. Alt and S. What that does is it copies a link of your trade, and then you can put that in there. So time of the day, let's fill this all out. Time of the day was 1950. So this wouldn't have met my rules technically. Okay, but you can test the entries. The entry was a RBR 50. Okay, the stop was, I think, 9.9, I think we said it was. Okay, you made 0.5 on it. That's great. And then now we've got this link here. So whenever you want to go back and revise your rules, you can then have a look at the trade, and you can maybe look what it would have done. Let's say you held this on for a little bit longer. Okay, maybe you can hold that on a little bit longer. So let's see that. Okay, so that's a perfect example. Okay, let's say I hadn't gone to break even at 1R, but instead I've gone to break even at 2R. Well, what's happened then? Well, now, actually, if I hadn't gone to break even at 1R, but I had gone to 2R, this exact same trade, that turns into now a 0.5 and then a 1 there. So you can then go and kind of revise these rules and see whether trades would have performed better or worse if you had tweaked those rules, okay? And then maybe we take a screenshot of that, and that is, let's say it's something you're toying with, an idea you're toying with. Do I go break even at 1R? Do I go break even at 2R? Well, now we know that in this trade, okay, it would have worked out. Okay, let's click on that link. Let me. Okay, click on that link. Okay, so now I can go back to it and I can revise my rules. I can see, right, it actually would have worked out. So this is a way of you not just testing one system, but maybe a couple of sets of rules as well. Maybe you've got a couple of things you want to play around with. So you can see how powerful this can be. Now, let's just wipe all of this now, because this is now done with. We can delete it completely off our chart. What have we had? Well, we've reached our higher time frame zone. Okay, this is the 4-hour chart. We've had a major break of structure there, imbalances left behind, liquidity left below here. So we've got a reason for price to move back up. We've got liquidity left below there. It's come back into our zone and it's given us a really nice rejection. So what I'm going to be looking for here is entries from this area. So we've got a few little zones here. We got a few little zone, one little zone there. Okay, we're drawing our premium and discount because that's our new range. Okay, I'm doing this quickly, guys, just because I'm conscious some of you got to go. And then let's have a look. Let's see what happens. Okay, so you can just press play on the chart. Right, okay, we're in this zone. Okay, but it's not in premium. So we're not fussed about that. We probably wouldn't have even drawn that on. Okay, what we're looking for is either this zone or there is technically a zone up here as well. So we're looking for one of these to be tagged. Let's see what happens. Okay, so we're in that zone now. Okay, we've had one push into it, a second push into it. Okay, still not broken any structure. So we've had one push, one push into this zone. It depends where you frame the zone. I mean, you could class this as 3 pushes now. Let's just see what happens. Okay, so that zone's now dead. We can delete that completely. Okay, we've had one push into this zone. Let's just make that bigger. The last bit that's untested is there. So this is the last test. Okay, so that zone now is our higher time frame zone. Okay, 1, 2. Okay, break a structure. Okay, we probably use a different time frame for this. But let's see now whether we get an entry. No, we blow it completely. Okay, so that would have probably ended up being a loss. I mean, the reason why I didn't trade that, I wasn't fussed about that. What is that missing, guys? What is that break a structure missing? What has it not got?
Body close. Body close.
Yeah, it's a couple of things. No body close, and also there's no imbalance either. So this isn't a move we're fussed about. That's why I didn't place an entry. Okay, let's see what happens. So price is now blown this completely. Now in the higher time frame, we have now broken structure. Okay, whether that holds or not is a question because we've got this zone above here. Okay. So look at how much time. So we've started trading here. That's the 17th of July. We're now here. Just in 5 minutes, we've done 2 days worth of trading. Okay. And this is why this is so useful. Now this, for me, this is now an entry. Okay. I'm looking at the zone all day long because we've broken this structure. I want to see if price comes back down into here because, it's kind of... So again, we're getting to technicalities here, okay? We've broken this structure, so technically we are buy side now. This is a break of the downtrend, so we are now technically bullish. So this is a zone that we can consider, but this zone didn't break any major structure. So this, for me, is a weak zone. It's weak because this move down didn't break this low. This was strong because this move down broke that low, okay? So for me, I'm looking to see what happens now. There's nothing clear on this chart. Let's see what happens. See if we get down. Oh, we blow that zone as well. Okay, so as expected, that weak zone has been blown. We can clear that off. Let's see if we get anything. Okay. Broken structure again. Let's zoom out to time frame. Let's see what's happening. So we might be doing something up here. Let's have a quick look. Again, this is a bit of an iffy zone as well. It did push down. It did break some structural points, but it wasn't a swing low particularly. Let's have a quick look what happens. So you can see, sometimes, guys, these setups that we're looking for, they won't happen all the time. We're kind of moving down now. I don't really like that price action, really. I want to see what price does here. Maybe there's an entry there. Yeah, it's kind of an entry there. I mean, let's say you were going to take, an average kind of trade here. Okay. Let's just have a look at this. So we are in a downtrend, technically on the 15-minute time frame. We've had a raid of the highs above. Okay, raid there, and then we've had a breaker structure down here. Okay, breaker structure down there. Okay, we set our entry at the 50%, stop above there. I am conscious that we may actually come and test this zone here as well, because this is a really clean raid. So that, I quite like the look of that. Okay, so there's maybe a double trade that we look for. We've entered into the trade straight away. We've got in. Okay, let's see if we get our 1R out of it. No, we get stopped out. Okay, so that would now be on our spreadsheet 2 losses. So -2. Okay, -2. Let's see what happens from here. A nice move down. That's another entry there. So again, we set up again. So we've had our raid there. Raid of the highs. We've had a break of structure here. 50%. We draw on there. 50% get tagged in. Okay, in a downtrend still. We get our 1R. We get our 2R. 2R there. Okay, so now we've got 1R, 0.5, and then 1. Okay, so in total now, on our trades we've taken, we are down 0.5. Let's see if we get our 4. Should be down here. Okay, so we get our 4. So that now puts us on this trade here, which is a 2. So now we're back in profit for the week. Okay, we're back in profit for the week. We are on 1.5. Okay, we've taken a couple of losses, admittedly, but we're 1.5. Once I've got my 4R, I'm looking for a structural point. And look at that zone that we looked at earlier. Okay, that would be our structural point that we'd be looking at. That is a nice 6.8. Okay, let's see if we get it perfectly. Yeah, okay, we do. So that's 6.8. And that's our home range trade. 6.8 times half is 3.4. So that's our home run trade. And now we've taken 5 trades, all looking at very similar entries, and we've ended up on 4.9. Okay. And very, very quickly, within 15 minutes, we've done 5 trades there. Okay. I need to do another 5 more, and that's my back testing done for the week. So you can see how quickly this is. How effective this is. This is a zone that we marked out from before. It's tagged it really nicely. It's gone all the way through. So we're cool with that. I'm cool with that all day long. All right. So look, guys, we're going to leave it there. Okay. Because I'm just conscious of time a little bit. Any questions before I go?
All good. All good. Thank you very much.
You're welcome. You're welcome. I might do another session tomorrow. I don't know if you guys want to jump on. I'll put it in the Discord, probably similar sort of time, about 7 o'clock, and I will just do a solid back testing session and talk through what I'm looking for. But yeah, I will put this. I'll send across the spreadsheet. I hope that's been useful, guys. Any questions? I'm sure they may come to you afterwards. Any questions? Just fire them across to me in a chat, in a message, whatever you want to do. Thank you for joining. And I've got some new content coming out tomorrow as well. I've got supply and demand videos coming out tomorrow. It's massive at the moment. It's like 45 minutes long because supply and demand is something that's really important for you to understand. But I'm going to condense it down. I'm going to cut the first section into like a 10-15 minute video, and that'll be out tomorrow evening as well. Cool.
Perfect.
Thanks for that, man. You have a nice evening.
You're welcome. Cheers, guys. See you later.
Will you help?
Nice one. Bye bye.